Good morning, noon, afternoon, evening, and happy 2018 to everyone. Welcome back. Welcome back to trading. Welcome back to the live rooms. How was your holidays? How were your holidays? How was your break, guys? I hope you enjoyed the break. You refreshed the energies. You spent some quality times. Thank you for that, John. Thank you very much. Well, yeah, Etienne, it's a bit cold here. It's a bit cold here, but it's good. Thank you very much, Wayne. Thank you very much. Danilo, learning, working. Well, working is good. We need to work. We don't work, we feel useless sometimes. We work, we create, we progress. So it's good. So once again, guys, wonderful and happy 2019 for everyone. We have a lot of things for 2018 planned, and we start working on it. As simple as that. No time to waste. Many things on the list, many things for creation, many things for reprogramming, for creating, upgrading, major upgrades are coming, and of course mastering and keep improving the things we have, the understanding of it, and the trading all together. So let's begin, guys. It's Tuesday today. Normally we do it on a Monday, the longest session, but due to the US day off yesterday, we had to do it today. So it's going to be the longest session of the week, and I hope you have your focus. Everything is, of course, recorded and will be uploaded later. So let's begin. We start with Forex. We go through commodities and indices, stocks, and of course, maybe we should start it soon. The world of crypto, the most volatile market as per the current period. So, Akos, thank you very much for the good words. I'm very happy you enjoyed the annual forecast. That's our long-term plans, right? So let's begin, guys, and let's see what do we have. We will go according to our reports. Okay, I'll cover all the euro pairs, pound pairs, and then the Pacifics and the crosses we have in between. Let's start with the euro dollar. I got tons of questions about this one. Vlad, what is happening? Why it's rallying? And my answer is simple. Why not? You remember the 124, 125 we have been talking about for a while. And the previous year, it was still in the previous year. It's weird to say that, but it was still in 2017. Now we were facing this range, right? But after breaking this trend line, I just want to remind for those of you who have been there, after breaking of this trend line, the options became to be bows, and after breaking out of the range, the option became to be very bullish. And why 124, 125 is such a critical zone? We have few very simple answers for that. Answer number one, because if we go to the monthly cycle, the one we've had before, we got this movement, we got a correction of the range, we got a beautiful cycle right there with a duplication. And the correction of this cycle would be the 38.2. And guess where the 38.2 lies? On the zone of 125. Plus, it's a very powerful psychological zone. In the past, it was behaving like a very massive support, and there is a very good chance that it will be also a powerful resistance right now. Then we apply the cycles, and what do we figure out? That the 61.8 zone lies exactly there, believe it or not, right? Exactly on the same area, right here, for the duplication. 1 plus 1 normally equals 2, that's what I always say. We add to that the current development of the daily cycle. The second leg of the weekly is the daily cycle by itself. And again, guess what do we get? The full extension of 161.8 Fibonacci would be around 124. Therefore, this becomes and develops as a critical zone. Of course, we add on that the combination of the divergences on the trend lines. We have this massive trend line on the monthly. We have a bearish, massive bearish divergence developing on the weekly. And we also have what Jordan has been teaching you guys while I was away. We have the situation of possible fake convergence. It used to be a divergence. It's breaking for new highs, regaining and rebuilding some kind of fake size, or what we let's call it the correct name. It is creating a possible last run, right? The final push for option expirations or position expirations. Therefore, the euro dollar currently has no bearish signs except the fact it is high and expensive. But as per technical signs, let me ask you a very simple question, guys. Remember, it's very simple when you want to simplify that, and it's very complicated when you want to complicate that. But complicate isn't good. We always are looking for to simplify things. And let me ask you this question. How does a cycle end? First of all, by divergence. Do we have the divergence developing? On weekly, yes. On daily, not yet. Do we have anything on the 4-hour chart beside this temporary extreme? The answer is no. Do we have a false break on the tops? Right? And it's a weekly cycle with the daily combos. Do we have any false break on the 4-hour or the 1-hour chart? The answer is no. Therefore, we are still in a bullish run. Therefore, every drop down in 2 waves, 4-hour, 1-hour chart should be considered as a buy opportunity. That's all. Now the question comes here, what about the short term? Can we trade the sells on the short term? The answer is yes, but you know my view, guys. Does it worse to go against weekly and against daily cycles? Normally it doesn't. Normally it's very tricky. Yes, it could pay, definitely. That's how the short-term trading exists, right? And created. But does it worse it? I don't like to do that when the picture is so obvious. But the reality is, if we drop and we start to break it into some kind of intraday cycles on the 30 minutes or 15 minutes, we can figure out that there is a possibility that we will see that going lower, something like Glenn, like you are asking for, like 121.60-ish, and from there fly. But again, my view is buy dips is safer than try and go against such higher time frames, like the daily and the weekly. If we break the to 15 minutes, even here, we still cannot see clearly and obviously triple cycle down. It is something like that. So if we get the 2 waves here and a breakout, then yes, it would be a good, valid, very short-term possible sell. But my view is we are still bullish, and the lower it goes, most likely the better the buy would be in the future. What kind of scenarios we might have in order to finish this bullish run? Very simple. False breaks followed by a convergence, or triple double. Now, since we are involved with weekly and the daily cycles, right? We need the triple double to be on the 1 hour or the 4 hour chart. Therefore, there is still plenty of room for that. It could be something like 1, 2, 3, 1, 2, and then a breakout. You can see by yourself, guys, we are very far away from that as for now. As per investment, we might have also some investment trade right here when the setup will happen, because the way I see that, somewhere during January, February, this pair has to stop and go down to through the summer period. So I do expect it to provide us this sell. I just think we still have some time to get this confirmation. Any questions as for now? By the way, I can see a lot of new names here during this period. So welcome to our family, guys, Traders Academy Club family. I want to remind you, take it step by step. Many of the terms I use and Jordan uses in his live rooms might be new to you, and that's okay. We do it just to scare you. No, just kidding. It's okay because we are dealing here with the real world of trading, as you know. It's not a joke. It's not only about, oh, break, sell, or buy. No, the combination is serious. And the only reason we do this combination to make it serious is to improve our chances to end up in profits. That's all. Okay? So we choose the directions, then we apply the strategies into the chosen directions. The idea is very simple. We are reading cycles. You have inside the trading report, which you will receive after the live rooms, you get invitations to watch the related videos. Start with the video that explains how to use and read the report, how to benefit from the live room and the report coming. And please find the time and watch the cycles webinars. Now we have a new video as well that we've had during the break period. I'm talking about the roadmap of cycles. Myself and Jordan are working on some kind of interactive roadmap file for you guys. It will be ready. It just takes a lot of time to create and cover the full of the scenarios. It will be done as promised. And that's all. Once again, welcome on board. Don't be scared. It looks scary for today. After a while, when you start to combine the puzzle and understand what we do and why we do, it becomes simpler, logical, and most importantly, profitable. So that's for the euro dollar. I can see no questions. That means, or I already got you shocked, or what was explained well. I hope this is option number 2. By the way, guys, the euro dollar on the daily chart creates and suggests this kind of triple cycle that is going and expanding and completing. Therefore, yes, Glenn, I replied your question before in between of my speech. If you didn't pay attention to that, yes, it could happen, but for me, I'm still bullish, as I said. And as I showed in 15 minutes, this is an option that is possible. If this is the triple cycle you count, it's doable to have something like 1, 2, or a range. One more push where from it goes by. Does it work to deal against the big forces? If you ask me, no, but it is a valid possibility. Let's continue, guys. The euro versus the pound. There is a continuing divergence on the 1 hour chart on the euro dollar, right? So where do you see a setup here? I don't see any setup. Yes, there is a divergence. I don't see any false break. I don't see 3+2. I don't see any trend line valid. I don't see nothing. As per divergences by itself, it's the best. Why? Because this is continuing divergence with 4 dropping highs. We can't ask for anything more than that. But as per setups, No, I don't see any. Okay, so it's two different things, right? The divergence and the setup. All right, euro pound, guys. The euro pound. Let's make a long story short. For the euro pound, as long as this top holds, the idea is bearish. Why? Because we have this triple cycle, we have a false break here on the weekly. It looks simply stunning, and we expect a continuation down. So the big invalidation for us is this, but it's very far away, at least at this stage, right? We therefore drop lower, and what do we find on the lower time frame? Kind of a possible range, because we did have well, that was on a 4-hour chart. It was a first special cycle. Then we had two false breaks in a row. Two false breaks in a row create a situation of exactly of a possible range. Right now, this is what we are facing. Therefore, while this top holds, we are bearish. Okay, this is our shorter term invalidation level right here, and basically we're looking for sell setups. Two waves up, breakouts, sells. This is the bottom line. That could happen on the 4-hour chart, which currently doesn't happen. That could happen on the 1-hour chart, which currently again doesn't happen. It's kind of stuck inside this range, this small range right here, right? Moving inside, up, down, still doesn't provide anything too obvious, correct, and strong. So no trading as for now on this pair. We are looking for the sell setups. This is our invalidation, right? And we are looking for sells. Two waves up is a great opportunity to go and look for sells with the break of that trend line. And false breaks and convergences, of course, lead that as well. Okay, so that's for the euro versus the pound. We are bearish. Euro versus the yen, another pair that we have been talking about for a while, of level of 138. Why 138? Because of this cycle. Okay, now on a daily we also have triple cycle, which is 1, 2, 3. Okay, this is a very classical zone. The weekly suggests a monster divergence. The daily is building up some kind of divergence. I still think we are going to see this one last push, wherefrom we are going to look for the sells. That's at least my view. So that means basically it is still bullish on the short term, right? For the long term, we are only after sells. Don't get confused here, guys. For the long term, we are for sells. We just need to find the setups. Do we have two false breaks on the 4-hour chart to end the weekly cycle? No, we don't. Do we have 3 waves down the 4-hour chart? No, we don't. Therefore, it's basically unusable and kind of untradeable, the situation that we've had. That's all. Therefore, we are waiting for the setups, and short term still buy retraces. Longer term, we are looking for the sells from higher levels. Any questions as for now here, guys, about any of these things? Very good. Costas, on the 4-hour chart, we have an alternative false break. On the 4-hour chart, we have an alternative false break. Oh, this one. Right, that's very true. Beautiful alternative false break. And we even had here a convergence, right? That means we need two waves to the upside and then a breakout, and you can sell. As for now, you can see that this is only one wave. crossed through the 38, through the 50. This is a warning sign, correct? Exactly. No double wave up as for now, therefore no sells. It's kind of a V move, exactly, kind of a V move. Therefore, we are not forcing, we are waiting, right? The momentum as for now, because of all that said, is yet bullish. But again, it's only for the short term, because for the long term, we are after sells, and this is going to be a critical zone to look for these sells to happen. All right, let's continue, guys. Then Euro versus the Canadian, a pair that was ranging the previous year, the pair that is still ranging this year. Now look what happens here, guys. This is the monthly range. Suggest the 170 on the top. This is the weekly range. Do you see that, guys? Right? And this is a daily range. Well, we can keep breaking that, and then we even come to the conclusion we have kind of a 4-hour chart range here. Range inside a range, inside a range, inside a range. Such situations are basically unreadable, not clear. Despite of the divergences happening, we're still inside a range. Therefore, there is nothing obvious and clear here for the long run. Euro Canadian is tradable for both directions, only on the short term as for now. There is simply nothing obvious and clear happening. The best momentum to gain in such opportunities is always two waves breakouts, right? Like in that case, it was a bearish momentum, and on the vice versa from here, it became a buy momentum, right? And then we traded on the lower time frames. This is really not a clear pair to trade. Euro versus the Aussie. This one, Mohammed, yes it is. We will discuss about the Canadian situation here. Okay. When it comes to CAD, but yes, for the Euro CAD, that might have the impact, definitely. If they increase the rates, as it suggests, the momentum could become very bearish. If they don't, we might go and see new highs. Okay. All right. So where we stand? The Euro versus the Aussie. Like its friend of the Euro CAD, the Euro Aussie is in a weekly range. We reached the top. It was still in a previous year that we saw together, and created a double cycle. So far, very sexy, right? Right after that, we went to the daily chart. We got a triple cycle by itself here. 1, 2, 3. Beautiful divergence ending that was simply stunning. Then go to the 4-hour chart, and on the 4-hour chart, celebration. We also had false breaks and convergence, and we also had triple cycle. Or call it an extended special cycle. It doesn't matter. Therefore, Euro versus the Aussie is under sells. Okay, the expectation of ours, according to that, 50% of the triple cycle, which was almost taken, it is still around the 151, and then 149, which is the 38 of the double cycle of the weekly, and then who knows, maybe possibility for the bottom of the range again. We are bearish here for the longer run. Short run, if this is our special triple, it doesn't matter. The idea is the same. We need one of the two situations: two waves correction or ranging correction. Okay, it doesn't matter how we turn it around, rallies should be sold. Okay, for those of you who are intraday traders can try to get and enjoy the second leg up, that's acceptable, right? For another push up or play inside the range. For the longer run, we are looking for the rallies to go and sell. Our invalidation level is this. As long as we are below, we would expect the euro versus the Aussie to provide some good bearish opportunity. All right. Euro versus the Kiwi. Same story. According to the weekly, we got triple down and we got we got double up. Sorry, double up as a correction. There is a divergence. Therefore, we expect a sell-off. Breaking that down on a daily chart, we can see that we have here a false break right on the top and another false break right here. We got right from the moment we got a convergence, and also on the 4-hour chart we got pretty much the same scenario like the euro versus the Aussie. This is kind of a range here, 3. Therefore, sell for the longer term. Short term buys are acceptable. Why? Because we are due to the correction, right? Correction could be in 2 waves, or correction could be in a ranging scenario, which means top, low, top, and a sell-off. Okay, so short term, very short term. Buy retraces still possible and doable. For longer term, sell the tops. Good levels to watch, by the way, for the sells are right here. Okay, that's critical levels for sells. And as per statistics, we are today on 16. Where are my statistics here? We're today on 16, and you can see 15, 17 might suggest a top, 16 as well. Okay, now these days are critical. If we have this push here, it could provide a very nice continuation further for sell opportunities. Okay, great. Costas, on daily we have that. Well, exactly on daily that was double wave correction, and that's why the short term retrace up to here is possible. We're looking for sells. Sell the highs, right? Sell the highs. Our invalidation for the longer plan is this. Any questions as for now, guys? All right, perfect. And the last one of the euros that we have, yes, Tural, for sure. You should ask your questions if you have. While you are writing, where is my last pair? Here, the euro franc. Yelan, what moving average do you have running on the chart? This one, the red one, it's 200. It's not in use. It's just visual stuff for the long terms, nothing else. Okay. By the way, guys, I want to remind you, this is interactive live room. If you would like to ask a question live, just let me know. Write it down here, and I will pass the microphone on the screen to you, so you can show your chart and ask your question. Okay, don't be shy. The more you ask, the easier it is for me to explain and for you to understand. The line, there is no other line. If you refer to this one, this is the Bollinger Bands. That's 20 moving average. There is nothing else I have. Okay. All right. Euro franc. What do we have with this pair? The same zone of 117, 118 that we have been dealing with all the last quarter of 2017. We are still there, by the way. Now, ironically or not, on 2015, the Swiss bank released the floor level they had for the euro versus the franc, the 120. They released that, and we all remember what happened. And tons of people, unfortunately, lost tons of money there. And right after that, without any official intervention, the euro franc slowly, very slowly, it took 3 years, returned all the way to the same levels, the same zone of 120, which I think and suspect would be critical. The closer we get into that, the stronger the sell should be. We are currently running off a possible new high after the divergence, which means possible sell-off situation. We are running on high levels, and we need to start and to look for false breaks and convergences. And the thing here is that we have it, right? We have a false break and we have a second false break. We have a divergence and we do build up a convergence. Now, the way I see that, it's time to start look for the sells, because the risk becomes small, the potential becomes very, very big. This pair is bearish from my point of view as long as these top hold. We must keep small invalidations. This is our current invalidation. Therefore, rallies in 2 waves should be considered as a good sell opportunities. Attila, for your question about the euro franc, could that react like 2015? Theoretically, it could. I don't think it will. Don't forget, it's not the bank holding the levels right now. It's a money flow leading to the same level. It's a completely different story. Different reality, different situation. Okay, so the way I see that, guys, I'm bearish. I think the sell is the right direction. This is the invalidation for the sells. Break above that will simply mean wait. That's why our invalidation is so small. So what we need is a retrace, and we start looking for a sell-off. Okay. So once again, we have the bearish divergence developing on the weekly, followed by the daily, fake new highs, the long divergence here, alternative trend lines, everything, psychological zone of the 118, and we also are coming to critical days. 14-15 was suggested as top. That was right here on the 15, and it was a top yesterday. You see that statistically? Therefore, there are much more reasons for the sell than for the buys. Therefore, the euro franc, from my point of view, becomes a sell, under sell option. Okay. Akos, news today. Well, news always can lead to volatility, and we need volatility, right? Sometimes they are with us, sometimes they are against us. As long as the risk reward is in our favor, there is not much to worry. One time it will be against you, the other time it will help you. News create volatility. As traders, we need volatility. Bottom line. Okay. Tural, did we cover the CAD? No. I'm still on the euro pairs. Step by step. Okay. It's a long session today, guys. So have your focus, coffee, and what else? Motivation. All right, guys. So this is for the euro franc, and we are done with the euro pairs. Any questions about any of the euro pairs? Welcome on board, Willem. Welcome on board. All right, great, guys. So let's continue. If there are no questions on the euro pairs, we are going to the pound pairs. Pound dollar, the pair that we have been longing for a long time. You remember that? We analyzed the cycle we've had here. This is the weekly cycle. We were discussing about the 140 and the 145, 146 zone. You remember that? We are approaching there. We're getting closer and closer and closer. This is cycle number 1. And this is still the huge cycle we have there. The way I see that, this is a very critical zone. The surrounding of 140. Next level is pretty naked, but this is around the 145, 146. For the very long one, we have the 152, 154. These two are very powerful magnet zones where from we expect a lot of the reaction. Now, what's going on with the weekly charts? Before I continue, I would like to answer some questions here. Tural, yes, it is recorded and would be uploaded. Okay. Later on, a trading report would be sent as well. What I really suggest for all the new friends here, once again, is first of all, watch the video tour inside the members area. Second, inside the trading report, watch the how to deal with the report and the live rooms. And third, step by step, start watching the cycles videos and the webinars. Learn these principles, and you would slowly cover all the things together. Just remember, it takes time. Okay, don't try to rush. If you rush, you could crash. Step by step. No one is forcing, no one is pushing. Remember that, guys. Okay, that's also for you, Precious, and welcome on board. Glenn, sorry, I lost the message. Euro dollar, is it possible to see before looking for new buys? Which time frame? This is the one you asked? Is this the one you refer? Well, this is the same question you asked before on the 1 hour chart, and my answer remains the same. Yes, it is. Yes, it is. My answer did not change. The answer is the same exactly, but the daily and weekly are still bullish here. There are no reasons, no false breaks, and no 3+2 on the 4 hour, on the 1 hour chart to avoid that. Could that make double wave retrace? Yes, it could. Okay. So, does it worse from my point of view to deal with that? Not really. You know, I love to go with the longer terms. Okay, if you had a family thing while I was answering, no problem. I know how it feels. Okay, let's continue, guys. So that was back to the pound dollar. We are to 140. We saw that the surrounding of for 140. What does it mean, the surrounding? Now we have to remember, trading isn't perfect. Levels are not perfect, right? When you have a level, it doesn't mean when you see in some reports someone claims the 137.80 is a resistance. You should know that this is a bit of funny because level cannot be specific in trading. Mr. Market is not Mr. Perfect, right? Surrounding means it could go a bit higher, it could be a bit lower. This is why this is a zone of prices. Okay, so this is what you should remember. Now, the 140 becomes critical due to the corrective cycles we just saw before. It also suggests extended triple cycle on the weekly time frame. This becomes a monster, and monsters should be respected. There is also a good resistance zone on the way, and of course the psychological zone, 140. If we break it to the daily time frame, we discover that this pair might go and create for us kind of a triple cycle here, which is 1, 2, 3. Is there a divergence currently formed confirmed with false break on a daily chart? The answer is no. Is there a divergence formed with a false break on the 4-hour chart? Again, the answer is no. Is there on the 1-hour chart? Again, the answer is no. Therefore, the pound dollar is still under bullish pressure. The idea here, Glenn, this might be your future question, so let me answer here in advance. If we break it into some intraday cycle, which would be more correct on the 30 minutes or 50 minutes, there is a possibility we're going to get something like that, but the pressure from the higher time frames is still bullish. Therefore, pound dollar is yet for buys. We are aiming the zone of 140. And I say zone again because no one guarantees we are going to get exactly there, right? But we definitely will keep that on our list, on the watch list, on our target zone. And once we approach there, we start to look for signs against us to get out from the longs. And the signs against us would be false breaks and convergence mainly, or 3 plus 2. Remember the beautiful principle of 3 plus 2? If we get 1, 2, 3, 1, 2, breakout, get out of the longs. That's all. So pound dollar, still bullish. Bottom line. Questions? Very good. By the way, guys, I just want to be very specific here because this is kind of a mistake that new members tend to do. When I say something is bullish or bearish, it doesn't mean we just buy. It means we are looking for the setups to buy. Setups based on what? Based on the strategies you use. It could be any of my strategies. It could be any of your own strategies. We set the directions. What directions do we trade? When we have a clear picture, we trade specific direction. When we trade, when we have no specific picture and clear picture and specific directions, we can trade both directions, one for short term, one for longer term. And sometimes there are conditions where it's simple untradable, and in that case we just don't trade. Okay, so that's very important to understand that, because I know the temptation the market has, and I know that as traders all we care about is just to trade. Just give me a reason to trade. Just give me something to buy or to sell. That's not the idea. That's not smart. That's not trading. That's gambling. That's just praying to the market that what we do will be right. Yeah? So you first of all set yourself the direction, and then you choose what car you want to drive, reaching your destination. Same here. Okay, you choose the directions, and this is what I mainly teach here: how to choose the directions correctly, how to respect the read of the market, and how to find your validation and invalidation levels, and then trade it. And what we do is we trade our systems. Okay, the systems I have on my list, we trade them on the directions we choose. And on Friday, we summarize the week how it was to trade using the strategies. That's the whole Bible of trading. Okay, so let's continue, guys. That's the pound dollar. Let's continue to the next pair. We covered the euro pound before. Pound yen would be the next one. Why pound yen is so interesting? Because this was a special cycle on the weekly chart right here. Right? We need two waves of the correction, which we get right now. We have a bearish divergence. So we can say a bearish period is coming. The question is coming from where? Now, if we apply the retracements levels of this cycle, we figure out that we are now in a great place of 38.2. We could expose up to the 50%. This is a very reasonable target after a special cycle before we go down. Okay, so for long term, yes, we are after sells. For the short term, we go to the daily chart and we figure out that we did have a false break right here. We did have a false break right here. But we did not yet have a convergence. Right? There was no convergence, no lower lows to confirm the bearish period, right? That's per the daily. We go to the 4-hour chart, the scenario would be exactly the same. After making this new high, there were no new false breaks on the way. And there is no 3+2 here. Therefore, the pound yen remains only good for short-term trading due to the high volatility around the critical levels, but we don't have any clear scenario yet for the long term. Why? It's important to explain why here, because if there is a possibility of 160, right, and there is no bearish reason, why wouldn't we just remain long? That's a good question to be asked here, right? And the answer would be because we are already on critical level based on the weekly cycle, followed by bearish divergence. We have to respect it. It could become bearish on any single moment. And therefore, to try and to convince the market we are right is not the right thing to do. Okay, so long term is not valid yet. Short term definitely is, to enjoy the high volatility. And there is a high volatility for this pair around the critical zones. Therefore, this pair is only for the short term yet, and both directions are tradable. Okay? Costas, the 1-hour chart will not help you here, simply because you still without two false breaks and the convergence. So on the 1-hour chart, you can only trade the daily volatility, right? Not the weekly. So you can still not turn it around. That's all. That's why it makes it tricky. Okay? Good. So Muhammad, I don't know this indicator, so it's hard to say that. For me, I love psychological zone and cycle zones, and we also have this action zones. Okay, which I love to use when it comes to short-term targets. And remember, the bottom line is risk reward. That's the bottom line of this game. Keep a good risk reward. Move to break even when possible, and you have a reason. And remember, don't try to be a hero. Okay? one of my friends told me recently, how does it go? The amount of no, how does it go? Something like the number of hero equals to 0 when it comes to trading. So don't try to be a hero, because hero exists on legends, not in trading. Okay, guys, remember that. Be smart. Trade on clear pictures. When it's clear, trade. When it's not clear, stay away. It's just for your good. It's too easy to find a reason why to press a buy or a sell. Too easy. It's much more responsible and complicated, maybe, to find a reason why not to trade. And this is where the real art comes. Why not to trade? Why yes to trade? Too easy. There is always a reason. Always. Always. All right, let's continue, guys. Pound versus the Canadian. We had our cycle, which we have been trading previously. Here we reached the 38.2, and therefore this pair is kind of without a clear direction for the longer run, right? However, this is a false break. This is a false break. This pair is moving inside the range. We are currently on the top of the range, therefore the pressure for possible sell is pretty serious, we can say. According to the daily cycle, we had a triple cycle up. We had a divergence? Yes, we did. According to that, we should be going into 50% retrace from here to here. Right? So therefore, as long as this top holds, the pressure of this pair is bearish. Dropping down to the 4-hour chart, we can figure out that it was a double cycle here, taking us to critical level, which isn't really in play because it's not equal legs of the double cycle, but it is a double cycle providing this and then in inner triple, right? The inner triple cycle. So bottom line, as long as this top holds, pound CAD is for sells. So we need 2 waves up, which we currently don't have. It's only one straight leg, right? One straight leg. We need 2 waves up and then breakouts, and we are looking for the sells. This is the top. As long as this one holds, pound CAD is bearish. We are aiming 50% retrace of this one, which is 166. Okay. Hold on, let me just clear that, please. And okay, let's see. On the weekly, it did its retrace. You mean this, the rally? Right, I guess so. Okay, the expectation is to continue the same direction as the previous. You mean this one? To the bearish side. Well, it's very possible, with a very high probability. The only thing here is that this is most likely still a ranging pattern, and as per ranging pattern, sometimes ranges tend to be longer than the previous trend. So if that was the previous trend, range could go and last for like twice longer. So the moves can be something like that for a while. Okay, but the bottom line, what you said, is very doable. I wouldn't rush to bet on that. From one side, the Canadian, if they increase the rates, which they are expected to do, could push it lower. From the other side, the pound is still bullish. This is kind of a conflict here. The only thing here is to remember, this is the approach I have for my annual forecast, is when we go for all-time highs, all-time lows, and we put the middle, we can split and figure out where is the main pressure. If you are below the middle is the normal price of an asset, right? Like all-time highs and sells. If you are very below, the logic is look for the buys. If you are very above, the logic is look for sells. Currently, we are below, right? So that's why I wouldn't rush for very long-term decisions. The short-term decision is bearish, and this is what I would be definitely looking to do. Again, this is just my 2 cents. I might be wrong. Okay. Okay. Mohammed, I'm very happy to hear that you love the the triple B system. Very happy. Thank you very much for that. Okay, so that's for the pound CAD, guys. Let's continue. Pound Australian, pound Kiwi. Okay. Pound Aussie, the idea is the same. We had a double cycle, and we have reached, well, almost the zone of 38.2. We got a double cycle up. It's actually kind of a triple. 1, 2, 3. And we had a bearish divergence. Therefore, the pressure is still bearish for this pair on the short term. Looking on the daily cycle, we have had 1, 2, 3, right? The triple, no, it's actually not really triple because the middle is smaller. It's also double cycle by itself. So the 38.2 correction was reached, even the 50. So there is nothing to do according to that on this pair. So nothing for the long term on this pair. The only thing to enjoy with this pair, the pound Aussie, is short term. There is nothing clear and set for the long term. Only the short term currently is in play. And the short term is both directions possible. Why? Because according to weekly and daily, we can see that lower. According to the 4-hour chart, we can see that correcting even slightly higher. The volatility is here. Can we say it's really cool to trade? I don't think so. I think we have much better pairs. So pound Aussie, I would simply skip. I think we have much better opportunities. The direction for this pair is both. The suggested period of trading is shorter, but can we say we have it really set and ready for trading? My answer is no. Pound versus the Kiwi. Now this one is a bit of mystery. Why? This is a long term. Let's check this out. This is historical situation of almost 2 decades. It's pretty crazy to think about it, isn't it? Triple cycle. For very long term, there is a great chance we are going here. Now, for those of you who are looking to build up a pension plan, this could be a great investment, right? The only problem with it, of course, is the swap. So Islamic account is an option for investment. But this is again for the very, very long term. Let's break it to the short term. Short term, we did have 2 waves down, which was reflected by 2 waves up. We can simply say game over for this plan, right? We reached the zone of 2, which we have been talking about all 2017. We reached there. We reached the bearish period, and the daily cycle created a triple cycle corrective, right? Or a special cycle correction, 1, big 2, and 3. So the question is, what's next? Now on this view, we also reached the target, 38 and 50. So for long term, due to the monthly cycle, my view is very, very bullish. Weekly and daily does not provide nothing. Therefore, the only opportunity for us to trade is for the short terms. Short terms, this is the scenario we have here. So we should be aiming somewhere to this zone. So for this pair, I prefer buys. Currently my invalidation zone is here. And for this pair, I'm looking for the buys. simply because the short reach the targets, right? Which we've been talking about of this cycle, 38 and 50 were reached, and the monthly is bullish. Therefore, the idea is bullish. Invalidation for this pair would be right here. Okay. Targets, first of all, the 50% of this cycle, and then who knows, maybe all the way for new highs. Any questions about the pounds? Pound franc is the last one on the list of the pounds. And this one is a bit less clear to me, and I will explain. According to the monthly, we have a possibility of skyrocket. According to weekly, we have reached the correction, 38.2. According to daily, we have reached the zone. We have two false breaks. We, however, don't have any lower lows yet, right? But we definitely have the levels. Dropping down to the 4-hour chart, and we can see that we are stuck in the range. This. And that's why the decision here isn't obvious for long term. There is nothing to do. Therefore, pound franc is only for the short term and for both directions acceptable. The best thing to go with is the current momentum. Okay, that's the thing here. Currently, on this pair, the momentum is due to the levels, and the top of the range is bearish. Break above the range could lead for a bullish direction, but at this stage being, currently the top of the range is respecting, holding, and suggesting sells. So again, it's only for short term, for at least from my point of view, of course. And I will be going with the sells. The main pressure. Okay, while this stop is holding. So that's for our pounds. The euros are covered, the pounds are covered. Dollar pairs remained. Dollar versus the Canadian. Well, my view is that this triple cycle is going and correcting itself still. Hard to believe, right, that here we go. The 50% was taken, reached, right? Right here. But the level of the extension suggests the next magnet zone slightly lower. And we are talking about the 116. There is a very, very, very good chance that this pair is taking us exactly to there. If the rates will go up and the speech will follow accordingly, the dollar CAD should continue lower. The way I see that, as long as this top holds, this pair is under bearish pressure. What could happen here is, let me just erase that, guys. What could happen here is that this 1-hour chart cycle would create some kind of a push like this, and then a continuation. For me, this pair is under sell still, and I think we are going lower. The invalidation here is this high. We need two waves up and breakout in order to be able to go for sell. Dollar yen broke the range. Remember this range we have been talking about, the 2017, guys? Was holding beautifully, broke below. And the biggest question remains here is, so what's next? And as long as we have the lower highs, I think rallies should be sold. I believe we are going lower. 108 could be first target, and then a possible duplication to 100 could be done as well. So dollar yen for me is bearish for the longer run, but here comes the short run. We did have a view here that we can use. Okay, a little push to the from the top, correction, big move down, correction, and another push to the downside. So the short-term corrections are very acceptable up to the 38 and 50%. Short-term, I expect a rally with this as invalidation zone, where from I expect a continuation. So dollar yen, short-term bullish, long-term bearish. This is the invalidation for the short-term. This is the invalidation for the long-term sells. Okay, that's for the dollar yen. And the last dollar pair we have here naked is the dollar versus the franc. Why it's moving down? That's the question, right? The main rumors and speculations are about the Swiss to increase the rates somewhere during the year. That brings the bullish expectation, the bullish pressure, the bullish energies. The targets according to the technical view would be suggested the previous bottom, that's the 094, 095 zone, and then the duplication could go further, 091 for example. So the longer view here is still bearish, no bullish reasons to be considered, lower lows, lower highs, sell rallies. Invalidation for this run would be the trend line, of course, and the previous highs here. So this pair is still bearish. On the short term, yes, we can have pullbacks, which we will be looking to go and sell. The best timing to go for short-term longs would be when we start to see bullish false breaks. Do we have any false break, bullish false break currently? No. Do we have higher highs? No. Therefore, every rally is still a sell. Dollar franc remains bearish. That's for the dollar pairs. Pacifics. Aussie versus the dollar. We were bullish in 2017. We are bullish yet. I expect this pair to aim the 084 zone according to the cycle we have, or higher. We have this trend line going and holding from the weekly cycle. This is a bullish hidden divergence. The daily cycle suggested a beautiful run here. Simply perfect situation. For those of you who are in the club for a while, you guys remember that we have been talking about 076, 075 zone as an amazing buy coming. Remember? Here we are today, just 2 months later. And here we are, 500 points to the upside ish. So what's happening here? Long term only for buys, short term the 1 hour chart combination. This is not 4 hour chart cycle, the 1 hour chart cycle. Triple. That means we can start looking for possible sells on the short term. The way to do that would be to connect 2 false breaks or 3 plus 2, 1, 2, 3, 1, 2, breakout. This is what we need to get. 1, 2, 3, 1, 2, breakout. If we have the 1, 2, 3 plus 3 down, 2 up, we have a setup for correction. Okay, short-term sells are acceptable, long-term retraces should be only for buys. New Zealand dollar. Now this is another monster. which is still moving inside the range, and from my point of view, coming very, very seriously to some bearish zone. The closer we get to 0.74 or 0.75, the stronger the sells should be. That's for the long term. On the 4-hour chart, we also see 1, 2, 3. So bigger 2, of course. 3. Triple cycle is in creation. We are looking for short-term sells. Okay. 50% of this is definitely a target. 38 to 50 of this is a next possibility. Short term, we are looking for possible sells. We do need, how do we go for sells here, guys? The same story like with the Aussie dollar. 1, 2, 3, 1, 2, and sells. 3 plus 2 provide a sell. We have a gap zone right here, which might be going closed. Okay. Watch this out. Short term, we are looking for possible sells after 3 plus 2. Long term, we still suspect and expect it to go and take us to 0.74 or 0.75 before much serious move will take place. And the crossing between the Aussie versus the Kiwi, one of my favorites. Why? Because the monthly cycle suggests we're still on the bottom of this range, which means we still need to go to the balance zone around the 120. On the weekly cycle, we have the range, long-term range. And on the daily cycle, we had 3 plus 2. 1, 2, 3, 1, 2. False break happened here. Bullish divergence happened here. As long as this low holds, I'm bullish. Okay, so Aussie Kiwi is bullish, and this is the invalidation. Okay. By the way, this pair had a very beautiful situation here, right on the false break. Look what happened here. It was a fake convergence idea, which was reflected by the 1-hour chart bullish divergence. The break above here gave a very, very good bullish reasons, bullish expectation for this pair. Bottom line, bullish. This is the invalidation, 108.35. I stop for a second, guys. Do you have questions? Because I keep going and going and going. Are there any questions about any of the pairs covered recently? I know it's confusing, but this is, as I said, this is the weekly plan. We prepare the full week, guys. It might be look like wow, crazy, scary, but it's very important to cover everything and to explain everything, so you know how to deal with the things that we have. Any questions? Perfect. I got you scared enough, right? Not to ask questions. Let's continue, guys. Then our next of the Pacific pairs, Aussie, where it disappeared from my list here. Aussie versus the franc. Short term, bearish, long term, bullish. Why? According to the long term, I still have this. So we expected for a pension period, we expected to go higher. According to weekly, we have not much because we are still stuck inside this one candle. This is kind of a range, kind of a situation, right? According to daily, we had triple up, double down, back to the 50. Can we ask for more in such situations? No, we can't. So as long as this low holds, we are bullish for the long term. On the short term, however, we got a triple cycle to the upside, which could be also called a special cycle. You name it, the idea is the same. When we expect this to happen, short term bearish versus this top, long term bullish only for buys versus this level of invalidation. Okay, the picture here is pretty beautiful. Aussie versus the Canadian. Someone asked me about this pair before. According to the weekly, we are still inside a range, right on the middle, so not really classical. According to daily, we had this triple, so we are aiming somewhere to here, approximately the parity level. Now is the correction. It's still bullish. We do start to see some bearish signs of the divergence here, which means we have to be careful and pay attention to the false breaks. The reality is that we are now creating possible false break number 1, which is seen on the 1-hour chart. Right? Another false break on the top would be a warning sign. We will have to be very careful about that. Okay, so if we get another false break, it would be time to avoid the buys and start looking for possible sells. So the closer we go to parity, it will provide the sells. I don't see any reason to deal with this pair in a bearish view, at least as for now. The expectations are still to push closer to the parity, and when we are there, yes, I believe we are going lower. So this pair is only for a short term. Currently momentum is still bullish. Around the parity level, I think it will become bearish. Aussie versus the yen. According to the weekly cycle, we had special down, double up. Game is over. Nothing to do according to the weekly cycle. No clear picture. Are we moving higher? Are we moving lower? Nothing in the play. According to daily, false breaks on the top, false break on the bottom, creating the reality of a range. As a range suggests, hi Nuno, good to see you here with us, and Happy New Year. According to the daily range, we should be looking for possible sell-off if we have the reasons. Let's drop lower. According to the 1-hour chart we've had here, triple cycle, and now double cycle to the upside, right? So bearish it is. We are looking for possibilities for sells for the Aussie versus the yen only on the short term. Why only on the short term? Because the weekly does not suggest any clear scenario, and the daily is the only one providing some kind of a scenario of a range. So for us, we are looking for sells. The sells could happen right from here, or the sells could happen with another spike to the upside and a push. Both scenarios are acceptable, but the direction that is preferred for the Aussie versus the yen would be looking for the sells. New Zealandian pairs. Where is that? Here. New Zealandian Canadian. According to the weekly, still stuck in this range. Nothing really to do here. According to the daily, stuck inside this range. Double cycle to the upside, top of the range. As long as this top holds, we are for a possible valid sells. Going down to the 4-hour chart, we have a double cycle here, double cycle here. And on the 1-hour chart, it would suggest us a triple cycle. Right? So bearish on the short term versus this top, no long-term directions. This is the invalidation for the bearish sell expectations. Okay, this is the invalidation, top of this level right here. Looking for short term only. New Zealand versus the yen was stuck inside the weekly range on 2017, still stuck inside the range on 2018. Do we have anything clear here? Not really. Triple down, affected by a rally. Nothing we can do. I don't even see any reason to trade it on the short term. No false breaks. Nothing. 3. It's not even 3+2. No. Kiwi yen is out of my list, guys. Nothing obvious currently. Avoiding that. Pound Kiwi versus the franc. Let's check this out. According to the monthly double cycle, we get nothing. We get inside the range here. According to the weekly, we get inside this range. And according to the daily, we got 3 down, 2 up. 2 up is this is a beautiful one. Much better than Kiwi yen. 3, 2, bearish divergence. According to these two, we are going to 38.2, which is the zone of 0.6950 or slightly lower. According to the 4-hour and the 1-hour chart, we got this cycle 1, 2, 3. We have one move up or one move down, kind of a ranging scenario here. So yep, sell the rallies to 0.6940, 0.6950 zone. Short-term trading only. Short-term trading only with invalidation of here. Okay, for those who ask the Kiwi versus the franc. And CAD yen, special cycle down that we have been dealing with on 2017. That's why we have been long here, guys. You remember that. We got the targets, right? We got the target. We reached the 90.91. Simply perfect. 2 waves to the upside as a correction, according to the daily. According to the daily, we basically have nothing on a daily. CAD yen is for both directions and only for the short term. There is nothing to do on weekly and daily as the targets were reached and no new cycle developed. Certainly. So CAD yen, both directions to trade are acceptable, are possible, and only for the short term. Just I want to remind you guys, do we want to trade in such conditions? I want you to check this out and answer. Do you think these conditions are good and smart to trade? The current way it develops. What do you think? Exactly. We got 2 or 3 candles here and we get stuck inside that. This is a sign of what? That the big money is out of the market. Therefore, CAD yen, both directions are acceptable, really not the best pair to trade, as you can see yourself. Yeah. And remember, if there are too many reasons why not to trade, it's better not to trade. So, good news, guys, we are done with the first part of the week. This is the Forex. We covered them all. Commodities. Let's begin. According to, let's start with that. This one is mysterious. Why? According to Akos, I will reach that, don't worry. I will reach the ripple. Okay. Costas, enjoy. Guys, I'm sorry it takes a lot of time, I know, but we have to prepare the full week. Okay, so those of you who have to go and leave me alone, no problem. I will try not to be upset. Just watch the recording so you know exactly what should be done. Okay, take care, guys. Gold. Why it's tricky, guys? Because according to the monthly cycle, this monthly and weekly, this is a possibility of that, despite of all the conversations. So I would be very careful to announce already that we are going to skyrocket. However, I myself also am still bullish, and I think this is well, the correct thing in the current conditions. Plus, when we are looking on a weekly scenario, this is a bullish hidden divergence. Therefore, we still can expect these two waves to complete, and that means go to 1400 or even higher. So for long term, I'm bullish. For the short term, this is what we have, right? And it's kind of building it into a probability and possibility of the special cycles. I want to see two waves retraces, which will most likely provide us great buys. No, I don't think we need to deal with sells, simply because I don't see any reason for that. But I do want to see two waves retraces to the downside and look for buys, because I think we could and should see 1400 or higher being reached. So for long term bullish it is. This is the invalidation. We need two waves retraces, 4-hour chart or 1-hour chart, to convert it into the buys. Silver stuck inside the daily range, which brings it to the same conclusion, bullish, with the invalidation here. Okay, the lower we can go, the better the next buy should be. I think silver is going to 18 plus, and I think after that it could go even to 20. Oil, after being bullish the entire previous year, it's time to be careful. Careful of this. Right? That was a bearish divergence that now build up as a convergence. In the top of the range, it looks like a critical zone. And we have the beautiful divergence in place. This is the low that we have to pay attention to. Break below this low, make it bearish. Okay, keep an eye on this one, guys. This could turn to be easily as a special cycle, which might provide the sells. Okay, so we need the break below this low. Okay, that's for the oil. Natural gas. One of the, well, from my point of view, one of the greatest investment possibilities, and also for trading. The reason is we're very close to the zero, so it's very cheap, and we have beautiful two false breaks on monthly chart with a bullish divergence. I suspect that to be able and fly on the coming years. Weekly cycle provides a beautiful combo, right? 1, 2. So theoretically we need to break the trend line and to gain the momentum. But according to the technical views, as long as this low holds, the expectations are bullish. What do we have on the daily chart here? Basically, currently nothing. We have 1, 2, 3, little 3 on the, it's more like on the 4-hour chart. And we got One, two, no specific pattern on the 4-hour chart. What we need is two waves, breakouts, and we are for buys. Okay, so natural gas is bullish for us, both investments, and of course the short-term trading for every two waves, breakouts, and this is our invalidation zone. Okay, indices. Now look what is happening here, guys, today. As I said many times, I never go against monthly and weekly divergence, even if that means I am missing a move. I clearly missed this rally, but it's much safer to miss a rally than to regret on a wrong decision. We need to be very, very careful. We don't listen carefully here, guys. We don't yet have any bearish reason, not yet. But when it hits, and it could be critical. The levels are critical. The divergences are critical on every time frame, monthly, daily, weekly. Through all of them are on extremes. So the 4-hour chart we need, and the 1-hour chart, we need to find the the reason, right? Currently, what happens is this is double cycle. This is the top. This is the most relevant low here. If we manage to break below this low, we can start aggressively only looking for sells, which means 1, 2, and a breakout. Not because we have the false breaks, not because we have a 3+2, just because we have the extremes. And many times, when there are extremes, this is what happens. Okay, so Nasdaq is the first one that starts to be, well, I would say ultra interesting. Okay, any questions, guys, about this one? No? Just a second. Okay, cool. Now let's continue. So this is about the Nasdaq. Then we go to the S&P, which suggests basically the same, extreme all around, right? 4-hour and 1-hour still don't provide much of the of these confirmations, but the only problem here is we don't have two candles rule even, right? But if we break this, we still respect the craziness. Let's call it this way. And then 1, 2, and breakouts. It doesn't mean we have all the setups already. I just want you to be prepared. And it's only aggressive approach. There is currently no possibilities for safe approach. Simply nothing. Okay? So attention to that, guys. Very, very important. Because why it's aggressive? Because we only have extremes. So the first lower lows we managed to develop, should be respected. That's all. And respected by break, two waves, breakout. That could provide an amazing risk reward opportunities. That's the only thing we do here. There is no way to be conservative. Dow Jones, same story. Exactly same story. The Japanese Nikkei, well, this one again starts to be more and more interesting. Let's see if we got it already. No false break yet. No, Nikkei I don't have anything yet to deal with. This also is stuck yet. No, that's all. The only two on the watch list would be currently. The only three, sorry. Nasdaq is the favorite. S&P and Dow Jones to follow. The rest, I still myself don't have any clear observation. Stocks, not many, but the one I managed to find that is interesting at the beginning of the year. Where this disappeared? Where is my buyer? Here. This is the one that starts to be kind of interesting, and here is why. According to the weekly cycle, right? This is what we have here. 1, 2, right? On a very beautiful level, we have this trend line, and we have a bullish divergence here. According to the weekly, the levels are pretty beautiful. Dropping down to the daily chart, and this is what we're gonna find. That's the weekly double, right? This is the daily. Another possibilities for buys. Dropping lower, 4-hour chart. False break on the top, false break on the bottom, false break on the top with a convergence, make it a possible push to the upside, or at least as a corrective and a range. Dropping to the 1-hour chart, let's put the levels here. That's our range. And this is the 50% target. Okay. So as long as this low holds, this is the invalidation. As long as this low holds, we are looking for buys, targeting the 38.2 and the 50%. In other words, 109, 111. Setup should be done by the break of the trend line or higher highs. Currently, there is no clear trend line here on the 1-hour chart. Therefore, we are looking for higher highs. Once we get the higher highs, we start to look for the buys towards 109, 111. That's the only interesting stock in the current conditions that I could have found. And the one that maybe everyone was waiting for, right? Ripple. This is the all-time view correction 61.8. This is the extension of the current cycle on, and the levels are the same. The 120 is a critical zone. Okay, Marcos, enjoy your day, my friend. Critical zone for the Ripple. We have to see the trend line broken to regain the bullish momentum. Currently, the entire environment is bearish, and it is bearish due to the speculation. What is going on? What is happening? What is happening? Thank you, Ken. You have a great day as well. What is happening around the central banks, the biggest banks, allowing or not allowing the transactions related to cryptocurrencies? Let's split it in two, guys. One, this is the future. This or other way around. They cannot fight it. They could limit it, they could challenge it, they cannot change it or fight it. They are trying to bring in they're trying to earn some time to regulate, to put some laws, make it harder. They can't change the reality. We are facing a new reality, and we have to remember that. The best advantage we have of the cryptocurrencies, I'm not talking about investments or not at this stage, I'm talking about the possibilities. The best thing we have in cryptocurrencies is the volatility. We do not care what's flying, what's crashing. All we care about is volatility. It's moving, It's moving big. It's providing unbelievable risk rewards during the days. And this is what we should take advantage of. Ripple is on critical zone, as you just saw. We need to start looking for false breaks and then the trendline breakouts in order to become bullish again. I don't think blind attacks are smart. We do develop a bullish hidden divergence. This is a bend to bend move, and the 4-hour chart and the 1-hour chart brings its own combinations. We are in front of something big. It might take time, it might play lower, but we are now on critical zone to start looking for the bullish setups. Bitcoin, two critical zones of its own with the magnets 1, 2. We are going to false break here and fly, or we are going to push it slightly below 9,000, 10,000 and a fly. Tons of speculations around the Bitcoins, limits, make it harder. For me, this double cycle is just a great opportunity for those who missed the train. Go and try and join it. This trend line is going to provide opportunities. It might take time, guys. Don't rush. It might take time, but it's happening. Same with Dash, which is one of the greatest from my point of view. Beautiful trend line on the bottom. The lower we can get it, the better it is. Bullish hidden divergence is forming. We need to wait a confirmation with the 4-hour chart. Divergence as well. So anything like that could provide the levels for the buys. Okay. Currently the momentum is bearish, guys. Don't get it wrong, and don't fight it. Currently the momentum is bearish, and we have to remember that. Don't fight it. Same with Ethereum, which is one of my favorites for the very long term. It's still in a level where it could go back to the 800, maybe even lower. Don't claim it will, but if it will, get ready for possible buys. Ethereum is one of the greatest investments for long term, and it could provide these opportunities soon. Next ones, Zcash, after kissing the 800 zone, could aim the 500, 400 for another massive opportunities. Stay tuned. IOTA kissed the level of 4.5. Now almost twice cheaper. Anything around 2.5 or lower is a great levels to start and look for the possible buys. Monero, again another one. I like it a bit less for the reason that a lot of, let's say, dirty money is lying on the Monero. I wouldn't rush into this one. As per myself, not here. I would wait definitely for the level of 250 or 200 to start looking for the buys. Currently, I wouldn't deal with this one. What are the pairs? By the way, this is where is that here? The ETP. I think it's one of the greatest possible investments. It already was above 6. Now it's almost 3 times cheaper. For the long term, ETP could provide also a very, very, very good opportunity. What are one of my favorites, guys, is the crosses of pairs versus the Bitcoins. They provide a safer view. Let me just find it. Where is that? Here. For example, the Ripple versus the Bitcoin. Not the Bitcoin directly versus the bit, the min unit of the Bitcoin. Again, same story. 2 waves. The levels become critical. The 100 becomes a very psychological zone. The divergence developing. Anything surrounding that is amazing opportunity. And that's related to all of them. Neo versus the Bitcoin. Monero versus the Bitcoin. 2 waves down, buys. 2 waves down, buys. They are simply beautiful. And one of my favorites is the Ethereum versus the Bitcoin. Where did I put it? Here. Which on the annual forecast, I was talking about the level of 0.10. It was reached. I think Ethereum for the long term is much sexier than the Bitcoin. That's my personal view, and also Litecoin. Therefore, 2 waves, 1, 2, on Ethereum versus the Bitcoin. Look for buys. I think it's one of the best. Currently, they are in a bearish episode, and we can start looking for the bearish reactions. That's normal, that's healthy, and it's here to provide the next bullish reason. Okay? Every panic creates an opportunity. Remember that. That would be all for today, friends. It was a long session. Thank you very much for your attention. I hope you survived that. And you can continue and rock on your day. I wish you a wonderful week. I'm going to work on the report for you guys, which I'll publish later on today. I'll see you tomorrow. Jordan is back on track tomorrow as well. So once again, thank you for your time, and welcome to the new friends here. I hope you are not too scared after today. Have a wonderful day, and I'll see you tomorrow. Bye for now, guys.